How are we doing, everybody? Welcome to the very first video in the quantum trading course. Now this video is going to be going over the introduction to market structure. Now this is going to be going from absolute zero 101 basics behind market structure, and we're going to build it up to get you to a detailed and advanced level to really read market structure to a good understanding. But this is going to be an absolute 101 video for people who have never traded before or have never approached market structure in the way that we approach market structure here at Quantum. Whether you've done smart money before or whether you've never done smart money, we want to get everybody up to a level where you have a good understanding to market structure. Now if you've done it before, this is not going to be new to you, but you know, it's good just to be able to look, read and understand what we've got going on. So in the way that we trade, market structure is the most important thing that we are going to learn, and it is the reason why it is the biggest part of the course, why there's so many different sections, why there's so many different parts to it. There's so many concepts within market structure that we really need to nail, understand and get down, because some people overlook structure. They think it's easy. As we can see what we've got on the screen. We've got high highs, higher lows, lower highs. People just think that it is that simple, and structure tells you absolutely everything you need to know. Okay, once you've got your structure down, your supply and demand levels, your entries, they should come easy, right? Everything is based around your structure. Whether you're going to be selling, whether you're going to be buying, it can keep you in on the wrong side or the right side of the market. It will tell you where you're going to pass your positions. It tells you where you're going to get involved in your trades. It's going to tell you where you want to close your positions. It's going to give you where you're protected and your weak areas are on your charts. There's so many different things that, with all the different concepts behind structure, they're going to give you all this information, and we need to, if we're going to nail anything, really nail down structure. So like I said, we need to make sure we're all on the same page and we're taking this to absolute basics. And what we've got here on the front of us on our charts is we've got a trending market. So what we have in the market is the price can either be doing one or two things. Price can either be trending, or price can either be consolidating, or what we call being in a range bound market. A trending market is where price is either going up or going down, and then a consolidation or a range bound market is where price is moving sideways and it's contained between two price points. Now we'll go through that in another video or in another part of this section, going through a range bound market. But what we've got here in front of us are the two kinds of bullish or bearish trends that we have. So what we have here on the left hand side is what we've got is bullish market structure, or we've got is in an uptrend. Now what we can see here, this example that I'm circling right now, is your clear picture, clean as day sort of model behind how a bullish trend would look. Okay, and what we have below it is sort of more a real life example of how we might see this within the market. And I don't expect you to understand this just yet, because everything that we do with the theory behind what we teach in these these theory videos, we're going to take it to an application video, teach you it on the chart and go through it so it'll all make sense. But we're here just to teach you the theory behind it first. So when we look at this here, this is what we call bullish market structure, or prices in an uptrend. And the way that we define this, and they have characteristics of this, is that price is putting in a series of higher highs and higher lows within the market. Now how do we determine that price is in this uptrend? We can see that price is putting in a higher high. What happens is price pulls back, it puts in a new higher low, and what happens is we get what's called a break of structure, and we get a break of swing structure taken out our previous higher high. So we can see we've taken the old higher high and we've put in a new one, okay, which leaves now we've got this higher low, higher high. So now we've got this new higher high, and then price pulls back once again. We can see we put in a new higher low, and the high high gets taken again. And these are the characteristics of a bullish or an uptrend where price is moving up. We can see that the higher lows are consistently being taken every single time. While we look below it, we can see the higher lows are never getting broken. And that is how we can determine whether price is in an uptrend, because we don't expect to see the higher lows get broken, and we consistently see these high highs get taken. Now on the flip side, we have what's called bearish market structure in a downtrend, and this is where price is obviously pushing down. So we can see what we have is we have what's called lower lows and lower highs within the market. Now obviously these are the ways and the characteristics to understand and determine whether we are in this bearish trend. And what we see is we see price come and put in a new lower low, price pulls back, we put in this new high, and we get once again a breaker structure to the downside, getting this breaker structure taking out our lower low, and then we put in a new lower low. Then what do we get after that? We then get another pullback, price puts in then again another new high, which then leads to another breaker structure, which takes out the new lower low, which then leaves behind a new lower high. So what we are consistently doing is we are consistently taking out these lower lows. The lows are always being broken, whilst the highs are never being taken. And that's again how it works for the bullish trend. The highs are consistently being taken whilst the lows are never being broken. Now, when we go into later videos, when we truly go into swing structure and stuff, but breaks of structures are breaks of swing structure. That's what we need to understand. So we have a lower low, we price pulls back, put in a new high, and then when we get a break of swing structure, we then put in this new lower low. This lower high is obviously what we go into later videos is called a protected high. Then we have this weak lower low, and we just consistently see these lows get taken whilst the highs never get broken. As you can see, the lower low gets broken with a breaker structure, lower low gets broken with a breaker structure, and this one gets broken with a breaker structure, and you can see these lower highs never get taken. And that is how you can determine whether you're in this bearish trend, or whether if we go vice versa and we have these higher highs within the market, we can see that we are consistently taking out the higher highs whilst the higher lows are never being broken. So that's the sort of clear sort of view of how it would look if you were to have the perfect picture, clean example of how trends work within the market. But unfortunately, the market isn't always that clear. And what we can see here is we've got more of a real life example of a bullish trend, and then we've also got more of a real life example of a bearish trend. Okay, so what we can see here in the bullish trend, we still have these higher highs and higher lows being put into the market. Okay, we can see we put in a new higher high, prices pulled back, we put in a new low, and it's led to a breaker structure, taking out the old higher high and putting in a new one. Then it pulls back again, a new low, leads to take out structure, we get a breaker structure, and we put in a new higher high within the market, and we can see again, look, higher highs are consistently being taken whilst these higher lows are never being broken. Now, when we go into protected swing highs and lows and expectational order flow and things will make a little bit more sense, and swing structure and things. But just understand now the characteristics behind a bullish trend and the bearish trend. We are consistently taking out the highs for a bullish trend and the lows never get broken, and it's vice versa when it comes to bearish market structure. We are consistently taking out these lows and the highs are never getting broken. So just to show you back to more the real life example, we can see here that what we might see in a real life example is we put in this new higher high, and then obviously the higher low and the higher high. Now, price just doesn't pull back. Price likes to be messy. Price doesn't want to just do what it wants to do. And what we'd call this is called a complex pullback. Now, we're going to go into this in a later video, but we can see here that we have the high, and obviously this would have been the swing low. We pull back, okay, and then we then go ahead and break structure. Okay, we've had this breaker structure. Now, the higher low is the lowest point that's led to a breaker structure. So we can see here, this was the higher high. If we pull this back down, there's the higher low. This led to this new higher high. So now the lowest point that's led to the breaker structure is the new higher low. So then we put in a new higher high, and we can see here again, price now starts to pull back a little bit, and we can see this, and then we put in a new low that's led to a breaker structure. And once again, the lowest point that's led to the breaker structure is your higher low. Okay, so we can see here that this point here would be your higher low. And then what we might get here is what we have more of a complex pullback, and this is what we call sort of a range bound market, where we can see we still have this higher high and this higher low, and this is our swing structure. We'll go into this in a later video, but obviously what we can expect and see is that we're going to see a new higher low in the market before a higher high, and in order to put this in, we can see that we start getting this like complex pullback before we get this break of the higher high. But understand that no matter how complex this is, you can see that when we look at the higher highs and higher lows within the market, it doesn't matter what's happening internally right here. So you can see here, this is all internal structure. Again, we'll go into this in the later videos, but we can see that the highs are consistently being taken whilst the lows never get broken. And once again, we'll just have a look at this in the bearish example. We can see that we've got lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and a new lower low. And again, what do we know about the bearish characteristics or the bearish market structure or a downtrend? We are consistently looking to see the lows be taken whilst the lower highs are never being broken. And once again, what can we see? Lower low, prices pull back, put in a new lower high. That's led to this breaker structure, taking out the lower low. And again, we have our swing point between this point and this point. And we can see here that what was price done, it's pulled back, it's put in a new high, and again, it's put in a new lower low, okay? Leaving a new high, a new lower high. And this is what we can see happening. And we can just see these lows consistently being taken. and the highs never being broken. And this is where, you know, these are a little bit more messy, because for example, if we look at this and say we've got this lower high and this lower low, this is what we call swing structure, and a break of structure, as I said before, is a break of swing structure. But what we understand is that we are still expecting in a bearish trend to see a new lower low get put into the market, and we'll understand this more in detail when we go into expectational order flow. But what we need to understand is that we've got this new lower high in the market, a new lower low. We expect to see a new lower high before a new lower low. So everything that's going on inside here is all sort of complex structure, okay? And again, it'll all make more sense in another video when we go deeper into market structure. But what we've got to understand is that we just know the characteristics of a bearish market is we are consistently taking out these lower lows whilst the lower highs are never being broken. And you can see here that this was the most recent lower high and lower low. You can see we just started ranging inside of this, and this is what we call complex structure and complex pullback. But you can see here that this lower high still never got broken despite all of this happening. And then obviously then what do we go and do is we then go and take out the low, okay? And that is how we determine whether we are in this bullish market or bearish market. So now what I'm going to do is I'm just going to head over to another chart just to show you what happens now if we are in some sort of range or consolidational market. Right, okay, so we went over a bullish and a bearish trend, which we know is either when price is pushing up or pushing down. But if price isn't doing that and it's not trending, it's going to be doing one other thing, and that is consolidating, or what we call being in a range-bound market. Now, we knew the characteristics of a bullish trend being putting in new higher highs and higher lows in the market, and we knew in a bearish trend we put in lower lows and lower highs. Now, if you can think about what we might be doing in a consolidation or a range-bound market, this is where price cannot push up, and then it's trying to push up, but then what happens is it starts pulling back down, and then it tries to go back down, but then it struggles to go back down. So it's trying to put in bullish market structure, but it fails, and then it starts putting in bearish market structure. But then price can't push down, so then it goes back into bullish market structure. And what happens is we have these breaks of highs and lows. Market structure is failing to respect and go in any given direction. So what happens is you get these range bound and sideways price action, because price tries to push up, but then it can't, and then it'll try and push down, but then it can't, and it just creates this sideways range. So if we have a look at what we've got here, if we try and understand this from a market structure perspective, we can see that we've got a new lower high, a lower low, a lower high, a lower low, a lower high, and then a lower low. So what would we expect in a bearish trend? We'd expect to see a new lower high before a new lower low. Okay, but what's happened is price has broken structure bullish. Now we're putting a new higher high within the market, and then we'd expect to see a new higher low, which we get. Then we put in a new higher high. What would we expect to see now? A higher low before a higher high. But what happens again? Now we've broken back bearish. We've gone from bearish market structure to bullish market structure, back to bearish. So what happens here now? We put in a new lower low, a new lower high, a new lower low. What do we expect? A new lower high, potentially for a new lower low. But then what happens? We then get a break structure back to the top side. And then, so now we've got bullish market structure once again. Then we can see higher high, higher low, higher high, higher low, higher high. So this is looking nice, but then we could expect to see a new higher low within the market before higher high. Then price breaks back down to the downside. And what we're seeing is we're just seeing breaks of lows and highs. Price is failing to go in any given direction, and you can see that what happens is when price is trying to go in one direction and then the other direction, and it doesn't go in either direction, we just get this sideways range in a consolidation. So price is trying to push down, but then it can't, and then price tries to push up, and then it can't. And what happens is you get this range, and what it is price is stuck between two price points. So you can see here that price is contained between this low and this high, and price is failing. So price is trying to push up and break, but it can't break past this high, and then price will try and push lower, and it can't break past this low. And the same thing again, price tries to push up, and then it can't break past this high, and then it breaks below again, and then this again should then come and put a new lower high in before a new lower low. But then price tries to break and go below this low, but it's failing to, and it's gone back up, and it's just contained between two price points. And that is the criteria for a range bound or a consolidational market. Market structure isn't being respected cleanly. Obviously, when we see this bullish market structure, we then start seeing this bearish market structure, and we're just seeing high and lows being taken, highs and lows consistently being broken, and these swing points or these highs and lows here, price is just contained between the two. So that is what we're looking for when we are in a consolidation or a range bound market. So what we're going to do now is just going to take this over to the charts to understand it in a real life perspective and how we can apply this basic knowledge to the charts.